Okay, Shanna, we all know that feeling. You get that little postcard in the mail from your doctor's office reminding you that it's time for your annual physical.
Oh, yeah, I've got that too. And even if you feel perfectly healthy, you go. You get your blood pressure checked, you get your standard test done, and you do it because it's a proactive way to make sure everything is on track and to catch any potential issues before they become big problems.
Exactly. We do it for our health. We do it for our cars with an annual inspection. We do it for our homes with a yearly pest check. We're conditioned to understand the value of preventative maintenance in almost every area of our lives.
But how many of us take the same proactive approach with our financial health? I bet it's not many of us. And for most of us, the only time we do a deep dive into our finances is when there's a crisis, a job loss, a big unexpected bill.
And that's what we want to change today. We're going to give you a simple, straightforward checklist for your own annual financial checkup to ensure that you're just as healthy financially as you are physically.
I like it.
Welcome back to Making Sense of Your Sense. I'm Daniel Hill.
And I'm Shanna Browning. And today, what we're talking about is the power of a yearly financial review. Now, not as complicated as it sounds, and it's really one of the most effective things you can do to stay on track with your goals.
And so what we've done is we've broken it down into a 5-part checklist that you can do in a single afternoon. We'll cover your cash flow, your credit, your goals, your safety net, and those sneaky subscriptions.
Oh, they're out there. So let's start with the foundation, right? Our budget, or what we earn versus what we spend. If someone created a budget at the start of the year, why do we need to review it?
Because, Shanna, life is not static. Your income may have changed. Your expenses have almost certainly changed thanks to inflation. And your priorities might be different. A budget that was created last January is likely out of date. An annual review is your chance to make sure your spending plan still reflects your current reality.
So almost like a New Year's resolution.
Exactly.
Start in January. So this is more than just checking if you're on a budget. It's about updating the map itself. And what are the keys to looking at?
Well, I like to call this a cash flow analysis. First, look at your income. Did you get a raise? Did your spouse change jobs? Did you start a side hustle? Get an accurate, updated number for your average monthly take-home pay. Take-home pay is key.
And then there's the other side of that, right? There's the other ledger side that says your expenses.
Right. And you need to be honest here. Look at your big fixed expenses. Has your rent or your mortgage gone up? What about your car insurance or property taxes? Adjust those numbers. But the real insight comes from our variable categories, like groceries and gas. Don't just look at what you budgeted. Look at what you actually spent over the last 3 months to get a realistic average.
And it's also a great time to calculate your savings rate, which is a powerful number.
Shanna, how do you calculate that?
Well, it's simple. You take the total amount you saved and invested for the month. So your 401k contributions, your automatic transfer to savings, and you divide it by your gross, which is pre-tax income. So if you earn $5,000 a month gross income and you save a total of $500, your savings rate is 10%. This one number is a truly fantastic indicator of your financial health. This is your checkup. And so it's a great time to ask yourself, am I happy with this number? Can I bump it up by 1%?
Okay, so once the cash flow is analyzed, what's the next part of our checkup, Shanna?
Credit. That's the next part. So just like checking your blood pressure, you need to check your credit health at least once a year. This means two things that we've talked about before, but it's crucial to do them together. And that's pulling your credit report and checking your credit score.
So if you remember, we did a deep dive on this in episode 13. What's the quick summary?
Summary is, quickly, go to the official website, annualcreditreport.com. That's the official website. And pull your full credit reports from Equifax, Experience, and TransUnion. They're going to be all in that one credit report. This is your chance to be your own personal detective. Read through every single line. Make sure you recognize all the accounts. Check your personal information and look for any errors.
And if you find an error, and we did an episode on this, you dispute it.
Immediately. Dispute it immediately. An error on your credit report could be costing you real money. After you've reviewed your report, you check your score, which you can do for free through your bank or credit card. This gives you a vital sign. Is your score healthy? Has it gone up or has it gone down?
And if it's gone down, your checkup is the time to figure out why.
That's right. Why? Why did it go down? Did you miss a payment? Did you open a lot of new accounts recently? Or is there an error on your report that's dragging it down? The annual checkup isn't just about seeing the number. It's about understanding the story behind that number so you can take corrective action.
We want to fix it.
We want to fix it. So our cash flow is clear. Our credit is checked. What's next, Daniel?
Oh, it's my favorite part. It's the goals.
The goals.
A financial plan without goals is like a road trip without a destination. Your annual checkup is the perfect time to review your progress and set your intentions for the year ahead. But we need to set goals the right way.
So you're talking about making them more than just vague wishes.
Exactly. I am. And I'm talking about setting SMART goals. SMART goals is an acronym. It stands for specific, measurable, achievable, relevant, and time-bound. SMART.
I like it. Can you give me an example, please? Like a bad goal versus a SMART goal.
Okay, here you go. A bad goal. I want to save money. We've heard it. We've all heard it.
I want to save money.
What's your goal? Oh, I'm going to save money. It's not specific or measurable. A SMART goal is specific. I want to save $3,000 for a down payment on a new car. Measurable, $3,000. Achievable. I can do this by saving $250 a month. Relevant. My car is getting old, so this is an important goal. And time-bound. I will achieve this goal in 12 months.
Man, what an acronym. I like that. So it's much, much more powerful. It's an actual plan.
It is. So during your checkup, review your goals. Celebrate your wins, and then set 2 to 3 new SMART goals for the year ahead. Write them down, put them somewhere you'll see them, and it turns a vague financial hope into a concrete plan. Hey everyone, it's Daniel Hill from First Century Bank. If you've enjoyed listening to Making Sense of Your Sense, and you found our tips helpful for your financial journey, I want to ask you a quick favor. Please take a moment right now to hit that subscribe or follow button on your favorite podcast app. It's the best way to make sure you never miss an episode, and it helps other people in our community find the show. We also really want to hear from you. Do you have a question we haven't answered yet, or just want to let us know what you think of the podcast? If you're listening on Spotify, you can leave us a comment directly on the episode page, or you can always send us an email at podcast@fcbtn.com. We're building this show for you, and your feedback helps us make it even better. Thanks so much for listening and for being part of this journey with us. Now, Shannon, there are 2 more quick but critical checks that people often forget, and I call it the safety net audit.
And what's that involve?
Well, the first is your beneficiary audit. This is so important. You need to log into your 401k, your IRAs, any life insurance policies you have, and check to see who is listed as your beneficiary.
Man, life changes can make these dangerously out of date.
They really can. And if you've gotten married, divorced, had a child, or experienced the loss of a loved one, your listed beneficiaries might not reflect your current wishes. An ex-spouse could be still listed on an old 401k, for example. This is a 5-minute check that can prevent a massive headache and heartache for your family down the road.
So if an ex-spouse is on a 401k, that means the new spouse may not get the 401k.
Exactly.
Is that what I'm hearing?
Yes.
All right. Fantastic point. What's the other safety net check?
Well, do a quick insurance review. You don't have to be an expert. Just ask yourself a few simple questions. Does your homeowner or renter's insurance cover still reflect the value of your possessions? If you bought expensive jewelry or electronics this year, you might need a separate rider to cover them. Is your life insurance coverage still adequate, especially if you had a new child? It's just a quick sanity check to make sure your safety net is still strong. And that brings us to our last checkpoint and to this week's actionable tip. It's a task that can often have the most immediate and satisfying impact on your monthly budget.
So you're talking about that subscription audit, which in today's world, our finances are slowly being drained by a dozen little recurring charges that we often forget we even have, right? We did a free trial, 7 days free trial.
They're like little leeches.
And then you realize you forgot that 7-day free trial.
And it turns into a $15 monthly expense.
That's right.
Your action item this week is to print out your last bank statement or a couple recent credit card statements and grab a highlighter.
And your mission is to go through there line by line and highlight every single recurring subscription charge. This includes streaming services, music services, gym membership, subscription boxes, software subscriptions, and app store charges.
Phew, what a
There's
list.
A lot.
And it's so important because you can find some subscribing things. I did this myself a few months ago and realized I was paying for my Hulu streaming subscription twice.
Now, Daniel, how'd you do that?
I had signed up directly with Hulu years ago and then later bundled it with another service and completely forgot about the original subscription.
Fair.
It was a small charge, but it had been hitting my card every month for over a year. Well, it only took a few minutes on the phone to get it sorted out, but it's money I never would have gotten back if I hadn't done the audit.
Well, and it's a great example, right? Perfect example. It's not about canceling. Sometimes it's about finding errors. So once you have your list for each highlighted item, you have to ask yourself the tough question. Did I get enough value from this in the last month to justify the cost? And this is you talking to you. Be honest with yourself.
And your challenge, and it is a challenge, is to take action on at least one of them. If you haven't used a service in months, cancel it. You can always sign up later if you miss it. If it's a service you feel you use but you're overpaying for, like a cable or a cell phone bill, make the call to their customer service department and ask if you're on the best plan.
Because this is your money.
Mm-hmm.
And the single action can often find you $20, $50, or even more in your monthly budget. And it's one of the quickest ways to give yourself an instant raise and is the perfect final step for your annual checkup.
Shanna, it has been so great walking through this checklist with you. It's the kind of maintenance that prevents major breakdowns.
I totally agree, Daniel. Join us next week for another very important topic, banking for seniors, where we'll discuss protecting your finances in retirement. Thank you again for listening. I'm Shanna Browning.
And I'm Daniel Hill. Thanks for making us a part of your week, and go out and make some sense of your sense.